Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. So a lot has happened today, and I am not talking small news at all. I am talking huge changes that could have wild implications for the markets, for MOIS, for the economy in general for years to come. Let's begin on the biggest news that took place. The United Nations agency made some incredibly stark statements today, accusing the Federal Reserve and other central banks of pushing the entire global economy into a recession, followed by prolonged stagnation if they keep raising interest rates. That's right, the UN came out the gate violent and determined to accuse the Fed of risking the economy into a recession with their actions. It took me by surprise because I do not remember the UN taking a stance when the Fed decided to print trillions of dollars, which mostly went to the pockets of the 1% by the way, and insulating the economy. I guess the UN just decides to interfere with the processes the Fed is in charge of when stocks start going down and the trillions of accumulated wealth all of a sudden are vanishing. In its annual report, the UN Conference on Trade and Development said the Fed risks causing significant harm to developing countries if it persists with rapid rate rises. The agency estimated that a percentage point rise in the Fed's key interest rate lowers economic output in other rich countries by 0.5% and economic output in poor countries by 0.8% over the subsequent 3 years. This to me is nothing but virtue signaling. While it's a sad truth that poor countries will indeed be affected the most by a hawkish Fed, the need to tame inflation and bring prices back to real fundamental value is more pressing than ever. Besides, isn't the White House touting that the economy is still very strong despite a bearish stock market? I understand that the White House is not the UN, nor am I trying to make this political by any means, but when you come out accusing and demanding the Fed acts in par with whatever agenda you are trying to push, you better speak with substance about why it is you don't want things to be rebalanced back to normalcy and instead want to protect the precious pockets of the uber rich, who by the way, made trillions and trillions of dollars during the pandemic after Fed policy allowed them to hoard taxpayer-funded relief money. Small and medium-sized businesses went out of business left and right, but I didn't hear peep from the UN about Amazon more than doubling their market capitalization. The UN went on today to take an even more aggressive stance, accusing rich countries of imprudent gambles in inflation fights, demanding an urgent correction to prevent a series of debt, health and climate emergency for poorer countries. All in all, though as you guys know I do not respect the Fed whatsoever, and find Jerome Powell to be the most criminal force in the entire world for his handling of everything since taking office, I do applaud their uncompromising will to tame inflation, whatever the cost. The truth is, the UN is out of touch with reality if they think recession is something they can escape or avoid when it's already here. This is one of the problems that arises from months of relentless corporate media manipulation of factual evidence. Every indicator shows we have been in an awful recession, it's just that the stock market was situated in an isolated spot while the rest of the world struggled to get back up. Now that they are falling down, you have the media and the UN panicking. Their realization of the state of economic affairs in the world is either delayed by ignorance or ignored by malicious intent. I just hope the UN doesn't start making more demands to restrain the Fed from taming inflation, and even more so that our government doesn't take these demands serious. Next up, Credit Suisse has been making rounds left and right across all social media. Dubbed the new Lehman Brothers, the infamous investment bank is believed to be in a dire situation by which they cannot escape from. Though I will not declaratively say this is true or not, there is evidence that does suggest the precarious nature the global investment firm is situated in is one that could quickly flip upside down and cause a large domino effect of defaults across the entire financial system in the world. The panic is appearing to cause serious effect, with there being a huge sell-off of Credit Suisse shares and bonds. Their stock has fallen as much as 10% across a couple of days alongside bonds which hit new record lows today. Now, I have already seen the corporate media accuse retail investors of causing hysteria and that the sell-offs they are experiencing are a result of communities like Wall Street bets declaring the bank ready to default. The thing with this narrative is that it lacks the single most commonsensical requirement for it to be true. Retail ownership of Credit Suisse is incredibly low. The investing bank has never been a point of focus for retail investors for the most part, much less communities like Wall Street bets, which love to hate big financial corporations. The sell-offs are not because of retail hysteria. Even before the hysteria, credit default swaps, which are contracts that function like insurance on a firm defaulting on debt, have increased in price. The odds of their bankruptcy are indeed increasing and have been for some time, way before their name began making headway on investing communities. In my opinion, the media is once again looking to blame retail investors for the failures of the so-called professional and affluent investors. I guess that's the new manifesto on how to deal with corporate failure, just blame Reddit and Twitter. However, as you guys know, I love to be level-headed in all things, and I must also caution that though I think Credit Suisse is in a weird and dangerous position that should be further investigated, they are in a distinct position from where Lehman Brothers were. For once, Lehman collapsed because of its CDS, but also because it ran out of assets to put up for margin calls. Credit Suisse reiterated in a staff memo sent by the bank's chief executive that they don't have this problem. I will say that Lehman Brothers were also caught lying just days before their scheme fell apart, but given that we only have their word at the moment, it is important to caution our bias. Trust me, I would love for nothing more than Credit Suisse and the rest of the biggest banks of America to all go out of business, but I must refrain from viewing every situation and cherry-picking evidence that only suggests what I want to happen. Again, Credit Suisse is in an ugly situation with credit default swaps increasing, falling stock and bonds hitting record lows, but this is not confirmation of anything yet. I will continue to monitor the situation as it develops in the coming weeks and updating you on it. Today the stock market breathed some fresh air. After weeks of constantly getting beaten down non-stop, stocks made some big gains. Exhaustion peaked for a moment and benchmarks closed green today. Without skipping a beat, the CEOs and analysts all came out of their little bunkers today to talk about how markets are oversold and that a big bounce back is likely to happen soon. Of course, the big corporations are not buying yet, they are just telling retail to buy so that they can hold the bags while stock continue to decline after small bullish days. Remember, it's not what they say, it's what they do that we should be focused on. The real reason stocks jumped up today, which will go unmentioned by the media as they tout sell-off exhaustion, is because of oil. Oil prices jumped more than 4% because the Organization of the Petroleum Exporting Countries, more commonly known as OPEC, said it would consider reducing output while sterling rallied after the UK government said it would reverse the controversial tax cuts that recently plummeted British markets. Asian stocks continued to sell off today, and though American stocks went up, futures were mixed. All in all, it was a pretty mediocre day. GameStop ended the day green while AMC was red and Ape was just bloody. The stock has been consistently dipping, reaching a low of $2.40 today. And lastly, let's talk about the housing market. Home prices in the US have posted the biggest monthly decline since 2009. Median home prices fell 0.98% in August from a month earlier, which followed a 1.05% drop in July. The two periods mark the largest monthly declines since January 2009 and also represent 2 months of significant pullbacks after more than 2 years of record-breaking growth, as stated by Ben Grabowski, the Black Knight Data and Analytics president. This is more of a little update. We have talked a lot about how fast the new rates are driving affordability of homes to the lowest levels seen since the 1980s. The Fed continues to seek inflation, which is through the real estate market into its knees. However, do not be fooled that home prices are cheap. They are still falling and are bound to fall even more, but they are still considerably high. This is one of the reasons why so many would-be home buyers are backing out of their purchasing plans. They believe the home prices are bound to continue decreasing because of the anticipation that demand will fall further and further each month. At this moment, home values were up 12.1% from a year earlier in August according to the latest data report. However, it isn't only the buyers that are causing this rapid decrease in price, but that of would-be sellers too. Sellers are disincentivized from giving up their homes at these low prices, especially if they bought recently. And that is all I have for you guys today. I hope you liked the video. Let me know your thoughts below in the comment section. Also, let me know how you guys are feeling about Ape shares at the moment. I recently ran a poll on my Twitter and a lot of people were incredibly bullish about Ape under the belief that dilution will cause the stock price of AMC and Ape to soar to new highs. Do you also believe this to be true, or do you think Ape has fundamentally damaged MOIS for AMC? Again, I am only seeking opinions, not infighting, so let's all be respectful with one another even if you find the reasoning of others absurd and backwards. I got some heat this weekend, accused of not being a real AMC investor because I am not hyping up AMC constantly. To that end, I must be a shill indeed, because I am not the type to hype endlessly. I am a channel of reputable information with intent to educate people as to all the news and important events taking place as we continue to buy and hold meme stocks. To be honest, I will never change for the sake of appeasing people who have that constant need for validation on their investment in the sense of cheering. There are tons of other channels out there that love to promote and date MOAs every other day, so I would suggest checking those out if you like blind hype. I'm going to stick to facts and logic, and whenever MOAs happens, it happens. Join my Discord, link is in the video description. Hope to see you guys tomorrow and to the moon.